Welcome back. Let's get the first corporate conversation going on Trading Hour, and that's Nazara Technology in the back of the Q4 numbers. The stock started with a downtick of close to about 2%, but now is up 3%. Lots happening. First, there was a revenue decline of about 8% on a year-on-year basis. But the margins of the company have expanded on a year-on-year basis, and EBITDA margins now stand at close to about 11%. Bulk of the growth has come in the esports business. And the company is talking about growth and margins accelerating in FY25 and perhaps in M&A as well, as the M&A pipeline looks fairly robust. In another development today, the promoter has sold 6.4% stake. So to discuss all this, we have with us Nitish Mittersain, Joint MD and CEO of Nazara Tech, to take a few questions. Nitish, morning. This is Reema here. First, talk about this block deal. You've sold a 6.4% stake to an existing investor, Plutus Wealth Management. Why is that? With this, what does your stake come down to, the entire promoter holding? And do you have plans to offload further stake?
Sure. So as you would know, the promoter family's been nurturing and running this business for the last 25 years. And we believe that some liquidity for the promoter family was important. And that's the reason we did this transaction. I think what we're very happy to see is that Plutus Wealth, who has been an investor with us since the pre-IPO days and has also participated in many of the preferential placements that we did, including the last one, has shown tremendous confidence in the company, its promoters, and the management by acquiring this additional stake. And I think that makes us very happy that our investors are showing very strong confidence in us. The promoter stake will be about a little bit over 10% after this transaction.
And any more plans to bring in liquidity for the promoter family? And has the entire stake been bought by Plutus?
No plans to do any other stake sale at this point of time. And yes, it's been a block deal with Plutus.
Okay, let's get to your business then. First, if you could explain the decline in your top line, 8%. We've never seen Nazara Tech's revenues decline. So what happened this quarter? And what can you guide for FY25 on the top line?
I think there were 2-3 reasons causing this decline. One is we continue to see a denominator effect of the DataWorks client loss that we had done. Because last year we had a large revenue contribution from that particular client in this Q4 period, which was absent at this point of time, although it didn't impact margins much, because if you remember, that was a very low margin client for us. The other thing is the way the revenues of the open play business, because of the new GST policy, the way the revenues are being stated on a net basis of GST actually show much lower revenues compared to the actual state of the business. And therefore, we are counting lower revenues. We are quite okay with that. We are quite okay with that because for us, as Nazara, the quality of revenues matter more than revenue growth at all costs. And we think the underlying foundation of the business is very strong, which is shown by our operating cash flow. This time, our operating cash flow has actually exceeded our EBITDA. And that allows us to redeploy this cash into organic and inorganic opportunities. We believe going forward, the revenue growth will pick up quite strongly.
Nitish, hi. Good morning, Surabhi here. Just a couple of questions. First, let me just, since you brought up GST, let me get that out of the way. And then we want to talk about top line and all the restructuring and M&A that you're talking about. But on GST, because I thought that GST was an issue only for the real money gaming part of the business, which was very small, right? I remember you telling us over the course of the year that that's just about 3-4% of the total top line. So then what is this GST change, which you're saying impacted the top line?
Yes, I mean, it contributed to the decline in top line, not all of it. So 4% would become 2% in terms of how it is reported. Because our GST earlier was about 17-18% of our RMG business, which has now gone up to about 50% of that business. And we report on the net revenue, net of GST.
Okay. So how much is RMG now? Okay, I think we've just lost that feed.
Nitish, can you hear us?
I think we've just lost that feed with Nitish. We'll try and get him back in a bit. But in the meantime, Reema, there's a lot going on with the company, right? Because real money gaming is one aspect, is a very small part of it. But otherwise, it seems that they're looking at a lot of restructuring as well.
Yes, so that's what the company has said in their press release, that we're restructuring our corporate framework by either closing or merging entities that don't align with our vision, including Hala Play, Nazara Bangladesh, Mobile in Nigeria. They basically had a telecom vertical, which perhaps they're looking to scale down. Additionally, we are in the process of divesting Nazara Kenya, Pro, Crimson, Sports Utility. And so there is a lot of corporate restructuring, and they're looking at, not delisting, but exiting certain businesses. But
yeah, I think we've got Nitish back. So Nitish, just to go back to that point, can you just complete the point on real money gaming and what's the outlook? I mean, now that GST is here, maybe it's here to stay. What do you expect from that business? And then let's talk about all the restructuring, the divestments that Reema was just referring to, and the fact that you want to look at more inorganic growth. So just give us the whole strategy blueprint for the current year.
So the GST going forward is quite clear, and the business has absorbed it, is stable, has broken even, and now we're looking on how we can grow back the business. And we will continue to now positively look at M&A in that RMG space. And we are in conversations with a couple of larger players to see what can be done. In terms of restructuring, I think we looked at FY24 as creating a very strong foundation for future growth. We raised a good amount of capital. I think as a group, we raised INR 950 crores, which increased our cash balance to close to INR 1,450 crores. Puts us in a fantastic position to grow organically as well as invest in value-accretive acquisitions. We are looking at gaming companies, core gaming studios to buy. We are in due diligence phase with at least 3 or 4 of them and expect to get at least one over the finish line in Q2 of this year. So I think a lot of interesting opportunities ahead for us.
You spoke about, on the subject of margins, there is an impairment charge of 25 crore that the company has taken this quarter. Could you explain that for us?
Yes, it is our Hala Play business, which was in the fantasy sports space. I think we did very well actually to withdraw from that business in good time, because if we hadn't, we would have ended up burning a lot more cash trying to grow that business and then hit a roadblock with the GST in October. So I think it was a very good call taken by us in the last year or two. And now with this whole GST situation, we decided that the business was not worth building out. And from the intent of keeping a very clean balance sheet, we decided to write it off or to impair it.
Okay. Are there any more impairment charges for businesses which don't make sense for you? And Hala Play, you've completely written it off now?
Yes, Hala Play has been written off completely.
Okay. And for the other businesses, is there any, should the investors expect further impairment charges?
You see, as a M&A driven business, impairment gets tested every year. At this point of time, our auditors have done diligence across all our businesses and only found this to be requiring to be impaired.
Nitish, just to go back to real money gaming, and you said you're open to M&A opportunities. That's one area you're looking at. What's the thinking? I mean, do you think the market has digested 28% GST fairly well? Clearly, you still see opportunity. That's why you're thinking of M&A over there. What kind of company, what kind of size, and how much of your revenue do you think RMG can scale up to?
I think
as a percentage.
I think what is important is there is clarity. We've all along said that we need clarity. It's, of course, the GST can be less or can be more. That's a different topic of discussion for another day. But I think as long as clarity is there, we believe that this business can grow in a responsible manner and Nazara can play a part in it. In terms of targets, we would look at acquiring businesses that are top 1, top 2 in their space, that are market leaders and can create a large growth opportunity for us. In terms of share of this, RMG could potentially go to 20-30% of our revenues over the next 2-3 years, provided we get the right target that we require.
Okay, that's very interesting. So perhaps potential to go up to 20 to 30% of your business over the next couple of years. Got that. Let's talk about the other segment. I mean, sports has done pretty well for you. And there also, I think you're extending your stake in an entity, I believe, Next Wave, right? So just take us through what's happening with sports. That's been the fastest growth engine in FY24. What lies ahead in FY25 and the kind of investments you'll make, either organic or more M&A there? Again, give us some clues as to what categories, what are you looking at?
Sure. Our sports entertainment space is doing very well. Like you said, it comprises of Nodwin Gaming, which is the leading esports company in India with over 80% market share. There's a lot of activity happening there, both on the organic and M&A side. And we think FY25 will be a faster growth for them as compared to even FY24. In terms of the other sports segments, Sportskeeda has continued to outperform for us, doing extremely well in the US. They've acquired an entity last year called Pro Football Network, which has doubled in revenues and increased profitability. So there's a playbook that has got established there. We will try and do more of that this year. And the entity you spoke about, Next Wave Multimedia, we are acquiring 100% stake in that company with an intent to potentially merge it into the parent entity and bring home this very popular franchise of World Cricket Championship, which I think we can do a lot more with going forward. So yeah, a lot of activity happening on that segment. We will continue to invest organically, but also continue to look at inorganic acquisitions in all these three businesses.
Okay. You're guiding for accelerated revenue and EBITDA growth in FY25. What's the number we're looking at? Double digit, back to double digit on the top line?
Yes, definitely.
Okay.
We should grow. We expect the growth to really come in from Q2 of this year, but we should see healthy growth in top line and healthy growth in bottom line.
So double digit FY25 revenue growth picking up from Q2. So Q1 is going to be soft for you.
We'll see how it pans out, but at least I have more tangible view on Q2 onwards growth.
And why do you think Q1 you don't have the visibility or you're not confident about growth?
We have many of the initiatives we've taken, are still playing out and will start kicking in revenues from Q2.
Okay. And a quick word on margins. How much do you think you'll be able to expand margins given all the initiatives?
I think we'd like to see a similar expansion as last year. So at least 100 bips, if not more.
Got it. Thank you, Nitish, for joining in and wish you all the very best. That's Nazara Tech. The stock is up 3.5%. Get into a short break.